Hello and what's up guys, welcome to our YouTube channel. Today we'll be discussing reaccumulation phase of Wyckoff. Previously we had discussed accumulation and distribution in details. The links would be probably right here if you're interested in learning the basics of Wyckoff. First go throughout that video so it would be clear for you to understand this one. Okay, so today we'll be discussing reaccumulation. Reaccumulation is basically when institutions flip their shorts into longs. We'll be discussing reaccumulation phase and candlesticks in a while, but first of all we use the paint section so it would be easy for you to understand. Okay, so reaccumulation is basically when institutions flips their shorts, their sells into buys. Okay, so it starts with normal distribution phase of Wyckoff. What happens is price moves up, makes a primary supply, moves down again, prints liquidity, moves up, liquidates this primary supply and gives buying climax right here. Once it gives buying climax, again price moves down, prints liquidity in the form of trend line, and we call this as arithmetic rally. When price gives us arithmetic rally, it bounces up again, protects this high and prints more liquidity in the form of two equal highs and gives ST. Once it gives secondary test, now wait for the price to liquidate this AR. If it does liquidate AR, we call this as sign of weakness, but it's not necessary for the price to do so. Sometimes it does not liquidate this, protects this low and moves up again, liquidates this two equal highs in the form of UT. Once it gives us up thrust, now we have to differentiate between type 1 and type 2 schematic of distribution phase of Wyckoff. How to do so? You have to wait for the price to either break this low or either break this high. If price breaks this high, so it's type 2 schematic, and what we get here is UTAD. Okay, if it breaks this low before breaking this high, then it's type 1 schematic of Wyckoff distribution phase. Once it gives this UTAD, it's a perfect distribution phase of Wyckoff, and retails, dump money and smart money and institution and all the banks are involved in this market, in this chart. What happens for retail? This is a perfect distribution phase. Now they are waiting for the break of either this low or maybe either this low to get involved in their sell positions. Okay, once this low gets broken, you are supposed to wait for the price to retrace by 50% or by 40% of this imbalance or maybe area of inefficiencies right here to get involved in your sell positions. What happens once institutions have trapped enough retails and dump money? What happens? Price moves inside a channel like this. Those retails who have short by break of this low, now they are currently very happy with their profits. They're most probably enjoying and they're basically considering this to be as a perfect Wyckoff distribution phase, and they are targeting these lows somehow right here. Okay, what happens? Price moves inside a channel and we call this channel as a creek. They are perfectly in sells, but what happens next? Institutions liquidates this low of the creek. We call this as the liquidation of creek. The next moment this high gets broken. When this high gets broken, you're supposed to enter into this trade by the 50 or 40% of its retracement and open your long positions from this area, because price moves up from this area. Instead, retails, dump money and all the new traders were in sells, considering this to be as a distribution phase, but what they missed out was this channel, the liquidation of creek, and this is what we call the distribution phase of Wyckoff has now been shifted into accumulation, and we call this as the reaccumulation phase of Wyckoff. Okay, so this is how you get institutions trap you. You are in sells but price moves against you in opposite direction. This is what we call reaccumulation. We will be discussing the same chart on our candlesticks in a while, but before that, if you are fed up of exchange commissions and all those shits, if you trade lower time frames like 15-minute or 5-minute, there are lots of exchanges that will deduct most of your trading fees. But if you create new BitGet account with our link, the link would be in description, you will get 20 to 30% discount in your fee commissions. Okay, so make sure to make your BitGet account below from the description link and enjoy 30% discount on your trading fees. Okay, so currently we are on a random chart. We will be discussing Wyckoff reaccumulation, a simple schematic. What happens? Same as we discussed earlier on paint section. Price moves up, makes a primary supply, liquidates this primary supply, prints liquidity in the form of trend line, creates buying climax, moves down, arithmetic rally, up again, ST, creates liquidity in the form of two equal highs. Now liquidation of AR is not necessary, as we discussed earlier. What happens, price moves up, liquidates ST and gives UT. Now you have to differentiate either it's a type 1 schematic or type 2 schematic. To do so, you have to wait for the price to either break this low or either break this high. What happens, price broke this high and gives UTAD, and we call this as a type 2 schematic of Wyckoff distribution phase. Now everything is going perfectly as distribution phase of Wyckoff. Retail dump money and all those are waiting for the price to break this low and retraces back by 50 or 30% to get into sell positions. Same happens, institutions move the price exactly as they are waiting for to trap them. Okay, so price moves exactly in their desired direction, and now by the break of this low with the candle close, they are now involved in this sell trade. Now they are currently in sell positions with stop loss above these highs, targeting some lows on higher time frame analysis. But what happens, what they miss is, after this low is broken, institutions move the price inside this channel, and we call this as a creek. You have to wait for the low, this low. Once this low got broken, we call this as the liquidation of creek. Okay, once creek is liquidated, institutions know the next move, but retail's dump money and all those new traders are still in their sell positions. Maybe they are now break even on their trades, but they are enjoying their positions and they are adding their margin, and they're more confident that price will move down from this area. But what they are missing is, this is basically accumulation phase is basically now developing. How does it works? Once creek is liquidated, wait for this recent high to break. Price moves up, breaks this recent high and retraces back. Now this is the zone you are supposed to trigger your long positions, because the distribution phase of Wyckoff shifted into accumulation and price moves all the way against the retail traders, because they were sells from this zone. They were involved in sell positions from this area targeting these lows, but price moved exactly against them, liquidated all those shit retails by flipping distribution phase of Wyckoff into reaccumulation. Okay, so this is how this works. It was a simple bias called the reaccumulation phase of Wyckoff. Hope so it's clear for you to understand. If so, make sure to subscribe our YouTube channel and join us on Telegram for free trading signal, and make sure to make your new Bitget account with our referral link to get 30% discount on your trading fees. Okay, so that's enough for today. Make sure to subscribe my YouTube channel. Thank you very much.